Hey everyone, and welcome back to another Tesla weekly video for today. I hope you're all having a wonderful weekend so far. This video we have a lot to talk about. Some numbers out of China, some comments from some investors, then more news with regards to the Tesla Semi and Tesla FSD. And as always at the end, we'll look at the Tesla stock. So first up, the Tesla weekly insured numbers for the week March 18 to March 24. The number came in at 13,200. Quarter is now down 25.6% quarter over quarter. Year to date, it's down 5% year over year. As for the model mix, there were 10,708 Model Ys, 2,869 Model 3s. Then yesterday, huge news came out. Tesla produced their 6th millionth car. Now diving into some analyst and investors' comments. First up, we have Dan Ives here. Basically, he puts his price target now at $300. He still remains bullish, with Musk needing to navigate through this white knuckle period. Now, I do want to mention that a couple of weeks beforehand, actually 10 days beforehand, he did go on TV and talked about his stance on Tesla today, etc., etc. Back then, Tesla's price was in the round $160 or so. He did not change his price target. I found it a bit strange. We then got another note here from Canaccord. He has reiterated his Tesla price target of $234 and a buy rating. Overall, we view much of the negativity currently surrounding Tesla as extreme. Yes, the company is between two major growth waves. Yes, earnings revisions have been nasty for some time. We estimate supply constraint may have cost Tesla around 95,000 units in deliveries. And so we are adjusting our Q1 2024 delivery estimates from 441,000 to 420,000. You can pause the screen if you want to read the rest. Then of course, we've got another blog post / note from Morgan Stanley's Adam Jonas. We know it's very hard to imagine today, but we eventually expect to potentially see a load of new products coming out of Tesla and expect the stock to eventually price this in well ahead of their respective launches. We estimate Tesla's current model lineup leaves over 80% of the US market by segment volume weighted completely unaddressed. We look forward to an eventful second half of 2024. Probably talks about the Tesla Semi, or Cybertruck ramping up, then the compact car. Whenever that will come out remains to be seen. Then of course there's also the Tesla Roadster, although that's only going to address a very, very niche part of that market. I don't know which other vehicles he thinks Tesla will come out in the coming years. Maybe in the future we'll see a Tesla van, stuff like that. But I do believe that right now they're focused on Cybertruck, Tesla Semi, the Model 2 compact car / robotaxi car, of course, while still producing Model 3 and Model Ys, but we're talking about up and coming, ramping up in production, tooling type of vehicles. It's probably the pickup, the Tesla Semi, and the next generation car. Then after that, they might play around with some other models. Remains to be seen. Of course, do share your thoughts down in the comment section below. Now, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if not, we'll really appreciate that. Want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Up next, we've got a comment here from Brad Gerstner, CEO of Altimeter Capital. So he's betting on Elon Musk, particularly in the age of artificial intelligence, where he is building market-leading models. It's a no-brainer. When everybody else is negative about companies like that, that's where we start getting excited, particularly when they are run by a founder who is as extraordinary a product leader as Elon Musk. This is with regards to him saying that Elon Musk is the best product engineer CEO on the planet. He then said that the launch of Tesla FSD version 12 was a catalyst of why he feels so bullish about the stock. When I took a test drive in it, it was kind of a ChatGPT moment. Tesla totally scrapped their prior deterministic models and moved to an imitation learning model that really, for the first time, unlike Waymo, which is still a deterministic model, feels like human driving the car. Gerstner also spoke positively about the full self-driving component being available as a $199 a month subscription and compared it to when Apple released its Apple Music streaming service. That's the type of thing that other people can't easily copy. Well, Apple Music is still, in my opinion, not as great as Spotify. He says here that Elon Musk, Tesla, has got 5 million robot cars on the road collecting data that is training his imitation model. That makes it demonstrably better and almost impossible for all the additional OEMs to replicate. Of course, this is something we've talked about for quite a while. We've known this. Now, with regards to his comments now on Tesla, on the back of what he said about Alphabet, and then it was revealed that he actually bought more stock in Alphabet, I found it a bit strange, right? For weeks on weeks, you're talking pretty negatively about Alphabet, about Google on the podcast, in interviews, and then at the same time, you buy shares because the shares got hit based on what I would think your comments and other comments of the people in that industry. Found it a bit misleading in my opinion. Now, going back to the subscription model, the subscription thing he mentioned, Vitaly here on X posted this screenshot. This is something that again isn't new, but it's something I forgot about. So you've got the Supercharging membership for $12.99 a month. People that do not own Tesla, so those that have Ford right now, Rivian, and all the others that will have or that have a partnership with Tesla, could instead choose for a membership, a subscription type of membership, instead of paying as you go. The Supercharging membership allows non-Tesla vehicles to supercharge at the same prices as Tesla vehicle owners. This membership is designed for non-Tesla EVs. If you are a Tesla vehicle owner, you do not need a Supercharging membership. Why is this a positive thing? Well, one, you get recurring revenue with a subscription model, and two, it's good for the user as well, the non-Tesla user. Because right now, from what I've seen on videos, you're paying about 30% more than a Tesla owner when you go to a Tesla supercharger. So if you're having lots of road trips, if you have to travel a lot with your car, I mean, a subscription does make sense. It's cheaper for you, and Tesla now has another revenue stream. Don't sleep on the Tesla supercharging network. Moving on to Tesla FSD Beta, more specifically the free trial. So news came out pretty fast at the start of the week. Tesla has updated its website to now offer a 1-month free full self-driving capability for new vehicles purchases in Canada and the United States. Elon Musk then came out and said, all US cars that are capable of FSD will be enabled for a 1-month trial this week. And then just like that, on Friday, Tesla's FSD free trial is starting to roll out to Tesla owners in the United States that didn't previously purchase FSD. Within the next few weeks, over 1.7 million Tesla owners in North America will get to try FSD Beta for free for the first time via this trial. Now, of course, they make sure that you know that this is a supervised version of full self-driving. Now, I don't know if it's truly everyone that has access to it, because in my opinion right now, the FSD Beta one, if your driver score is not high, you don't have access to FSD Beta. Of course, correct me if I'm wrong in the comment section below. Then moving on to the Tesla Semi, my favorite products, let's say, something that still we're waiting to see what happens with that. Volume production ramping up. How are the test trials going with Pepsi? Maybe some other potential clients out there as well. We've got some semi news here, no pun intended. So first up, we have here the US EPA. They're finalizing stronger standards to reduce greenhouse gas emissions from heavy duty vehicles such as delivery trucks and tractor trailers. To which Ron Patel, which is the one-man PR guy for Tesla right now, he says here that the Tesla Semi is proving on a daily basis that zero emissions trucking will dominate in the near future. We are in the process of building a manufacturing facility at Giga Nevada to significantly increase production. Okay, I would love to hear more on that in the next earnings call or maybe in the next Tesla event. Again, I do still think that the second half of this year is going to be quite an exciting one, especially when we're going to exit 2024 into 2025. I think Tesla will be in a much better place. Remember, last year, at the end of last year, 2023, Tesla's stock was exiting 2023 into 2024 with good momentum. Tesla's business, not so much. I do think that we're going to flip the switch this year, and of course the stock will eventually follow. Moving on to the second Tesla truck news, apparently there are some reports that Tesla is in talks to build electric trucks or vans in Italy. Again, this is just a report. We know that Tesla is looking at other countries in Europe to build a next factory there, but with regards to trucks, I do still think that we're first going to see those in the United States and then in other markets. But Tesla semis in Europe is going to be a pretty huge market. Now, moving on to the last couple of things here. with regards to advertising, so this is something I missed last week. So Tesla has rejoined Facebook and is officially doing paid advertisements on the platform for the first time ever. Tesla originally removed its Facebook page 6 years ago, which in my opinion is a huge mistake. Remember, Facebook, the blue app, has over 3 billion monthly active users, or approximately 37% of the world's population. Pretty big target audience. So now we know that Tesla is doing digital advertising, not doing traditional advertising just yet. Maybe that will change in the future. Then last thing here, with regards to the graph, nothing much has changed. We started the week quite well, and then the last 2 days or so, the stock dropped back down under the 20-day moving average. Currently, the 200-day moving average still sits at $216, the 50-day one at $191, and the 20-day one at around $178 or so. RSI still low-ish, but as we ended the quarter, we are supposed to get the production and delivery numbers. Expect that to impact the stock in the coming days, maybe even weeks. So that will be it for this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. I'll see you all in the next one. Bye bye.